take your time, Ramsey. We're going to do a segment called This Call Is Now Being Recorded, where we have a conversation about whatever is on your mind. And you can tell me your deepest, darkest, most profitable secrets. And it will only be shared between you, me, and a couple million people on the internet.
Okay, now after that scary stuff.
¿Cómo estás?
Muy bien, Samson. You? How are you?
I'm living la vida over here in Washington, D.C. with my
really?
Golden Girls cup. Yeah, well, I'm having some because I'm drinking my coffee early too.
Yeah, and sorry, last week I thought this call was last week. So I was like waiting for it. I messed up with my calendar. The thing is, I did something wrong, and now I didn't even have it booked. I was playing with my Outlook, a few days ago or weeks, and I just realized now that I changed my work schedule from 9 to like 8 p.m. So there's certain things on the agenda that do not really pop up. Right now it's 8:30 here, unless I like scroll up or down. So I was like, when is this call happening?
Because really it's partially pandemic, partially daylight saving times. And you're are you in Mexico City?
Yes, so we adjusted the clocks 1 week before you guys, which also was a very messy week for me. It's never happens like that. But well, how have you been? How's everything in Washington?
Washington is a little bit crazy. We've had some in the crowdfunding world. We've done some. As of October, we reached $500 million raised across all the platforms. So it's a big deal. That's 1,281 deals that have gone through this year. There's a lot of deal flows across the various platforms. You still have the Republics, the start engines, et cetera, who are doing well, but you have about a dozen other smaller platforms that are also claiming their piece of the pie.
Yeah, Rialto is trying to call up, right?
Yeah, so this is, if you're one of the legacy platforms, you're around 2012. Now you have so many new competitors. And so they're getting better. The competitors are getting better. And so it's actually super helpful for issuers, for founders who are looking for money, because they have more options to shop around.
No, definitely. And, and I'm sure you've heard this, and, that I send, deals to Republic. I have an amazing relationship with them, but lately has been so complicated to launch a deal. They have so many that they're reviewing and approving that it takes maybe 4 to 5 months to be alive.
Wow, 4 to 5 months.
Yeah.
I did see Republic bought a marketing firm.
Arora,
yeah, the Arora Project. So I don't actually know how you can do that, because rather the SEC, let me rant for just one moment. So when a crowdfunding platform buys a marketing company, it could lead to think people that this marketing company is going to provide them some advice because the platform is telling them that. And so I think initially my gut thought is, there's probably a conflict because the platforms are supposed to be impartial. And so I don't know how a platform buys a marketing company to help their issuers market. And also, I think Arora Project does a great job of marketing. I just don't know if a platform should have bought them. I'm gonna have to talk to some of the smarter people than myself. Be like, yes, that's fine. Or here's some of the issues, because it's probably just comes down to disclaimers. But this is where the platforms are the marketers are gonna charge you $30, $50, $100,000 to do marketing. Then the platforms are going to charge you their percentage. But now that the platform owns the marketing company, that money is sort of like a pass-through. And so it'll be very interesting to see how this happened, because I feel like they just bought Arora a couple of days ago, and within a week.
I'm not sure. I know that they're very diligent, and their legal team is not very flexible in a lot of things. So I'm sure they found a way. And if they make these, as you said, a lot of disclaimers, but also to bring down a little bit, the cost for issuers. As you said, we had a campaign that used DNA. The results were like hard to track.
Mm-hmm.
Obviously, they will say that they're raw, and that they use all of these acronyms to to hide that they cannot track how much you raised thanks to their efforts. And they should pay, I think, around 60K. And it's like, what did I get for my 60K? So if at some point they start bringing that overhead cost lower to make it more accessible for issuers, because these clients had a very decent budget, but imagine the main objective of crowdfunding is the lower part of the market, right?
Mm-hmm.
Not the guys that can just write checks of 60, 100, but companies that will change their lives with a $250,000 raise or $300,000. How would they get there if they need to pay 60,000, right? It's
yeah. So if it costs you 60,000 to raise 250, the cost of funds are misaligned. But you have to remember, the platforms are in it to make money. And so so this is why when Republic bought the Arora Project, I understand from a business perspective, they did it to make money, because that $60,000, their marketing company, Arora, will get that $60,000, but then the platform will also get, I think, I forget what Republic charges for their percentage. How much do they charge for their percentage? So they get 6% plus 2% equity in the deal. So, they're benefiting on both ends of the market, which is where I think the conflict comes in, but that's probably resolved with disclaimers. So someone smarter than me will be like, hey, this is.
Maybe we need to loop in Maureen.
Yeah, definitely. I'll have we'll give her a phone call, because the platforms are in it to make money, but that's also the opportunity for issuers, because we just have more platforms someone will be like, hey, if you want to raise, you can just use our platform. But part of it is also that issuer education to let them know this is on you. You have to do all of the work, because this goes back to your KPIs for, I gave you $60,000. What did I get? That's marketing 101. And so, this is where for issuers, you need to just let them know you're going to spend a shitload of money. If you don't develop those KPIs and the mechanisms for tracking, you're never going to understand your return on investment, your ROI. And that's in tracking the ROI for marketing dollars. That's not a funding portal job, or it's not something the funding portal should be doing. That is something that a marketing company can be doing. But now we're right back to that old chicken and the egg. Do you market, or do you build organic? Because marketing is, you spend a lot of money to try to grow your community fast. Organic growth is a pain in the ass. It takes forever, but it's quote unquote cheaper because it only requires your time and energy. So this is, that's the entrepreneur's challenge. They got to figure out, do we grow organically, or do we invest in spending money to grow the community and raise money? So I don't think there's a solution to that, unless you're like you go play sports for 10 years, and that 10 years you're building your community, and then you launch. So I am excited to see some of the influencers and sports folks come into crowdfunding in general.
Yeah, and you touched a very interesting point that I think, the sports, athletes and influencers, now that we'll be able to launch NFTs and share profits with their following base, like this song that was launched last week. I think the name of this guy is Lil Pump. I'm not sure. I've never heard of it.
Yeah, Lil Pump.
It has like hundreds of millions of listeners, but not me, which I'm not sure if it's good or bad, but it is what it is. But it's incredible how they could, they had all of those followers organically built over the years, and now they are inviting them to participate. So I think that will bring a lot more investors, not necessarily savvy investors, because they're followers. They just want a piece of the song, and eventually they will be seeing new deals, and they will be in the emailing list, and now they're part of the funnel, right? So,
well, this is what I think what's going to happen. So Lil Pump and his NFTs, he also did a royalty sharing agreement, and the NFTs had shit to do with that. The NFTs are just like, we're going to give you a 42 character receipt that says you bought something from us.
Yes.
It's the key to that is his royalty sharing agreement. And so what I think you'll see, particularly with influencers, is they won't go to the big three platforms. They already have their own crowd. They have, millions of people who follow them. All they actually need is a funding portal. So I think in the next iteration, you're going to see some funding portals who partner with influencers to build private labels. The person who's probably winning at this at the moment is David Ducini over in Silicon Prairie, meaning you just go to ramses.com and your investors, all they look at is information on ramses.com because you built your social media following. On the back end of that, what Silicon Prairie does is they build in all the compliance for a funding portal on the back of ramses.com. And so when you have people like Little Pump and other influencers who already have an audience, they won't want to send their organic traffic to a WeFund or Start Engine Republic. They'll want it to all come to their website. Yeah. Because then they'll actually be able to track better, what's my conversion rate? Because if you're going to this influencer's website, yes, you might come as an investor or as an investor, but you might also buy whatever else they're selling, their t-shirts, their music, exactly, etc. And so this is where you'll see this evolution is issuers won't go to brand name platforms. They'll want that service, crowdfunding as a service, on the back end of their own. And this is where I think David Ducini in Silicon Prairie, they're probably going to win this race.
And what do you think? It's a very interesting point. And what do you think, as you said, legacy platforms, so WeFund, Start Engine Republic, will do to counterweight that? Because obviously, they're growing a lot. They're investing a lot of money to continue to grow, maybe different path. So what was your take on that? Say, what would they or what should they be doing or being worried about?
With more platforms coming online, some of them are going to innovate. So the legacy platforms, they go head to head. They compete. They're spending dollars trying to be the biggest name in the industry. The smaller platforms, they don't compete. They innovate, meaning they don't, I forget who just raised like $135 million for their platform. It was either Republic or Start Engine.
Republic raised 150 2 weeks ago, Series B.
Right. So Republic raised $150 million. I'm betting over half of that is just going into marketing, which if they're smart, they will reduce their marketing costs by, hey, we're Republic. We just bought Arora Project, so we're going to pay ourselves. If you're an investor, do you think that's a good idea? I don't know. That's a board meeting conversation with your stakeholders. When these funding portals, when they raise hundreds of millions of dollars, they do it to spend on marketing. The smaller firms, they don't have the marketing budget, so they're going to innovate. They're not going to compete. And the innovation is how do we meet the needs of the market for those issuers who are trying to raise $250,000? Yeah. Right? Because last year, the average raise was $266,000. Right now, the average investment is around $810 per investor. And so when you just do the math, it's if you're trying to raise $1 million and the average investment is $800, how many eyeballs for your sales funnel? It goes, how many eyeballs do you need to see on your campaign, which means how much you need to market. Of the eyeballs, how many want to invest in your deal, are interested in it. And then from the interested folks, it funnels down to a very small rate. If you're really good, 2 to 3% will actually convert to investors. Yeah. And so you're going to have some smaller platforms who are just innovative and say, we will enable you to raise money for probably three to everything's on you, but our cost of funds are very low, because there's that difference between the cost to raise money using the platform and the cost for marketing. And so what we've been trying to tell people is, if you're going to go market your company, your good products and services. so that if people love your good products and services, then give them the
Yeah.
option to invest. Otherwise, you're just your investor acquisition cost goes through the roof.
Yeah, definitely. I agree with that. So it opens, a lot of questions, and I'm not sure if we will have enough time without a tequila or a beer to continue. So you say that, well, what you've seen and what you've heard of the market, that this is a new iteration. But eventually, do you think that SEC or FINRA will start being concerned that everyone can launch now using a backend portal or crowdfunding as a service, as you mentioned, and every Ramses.com or Samsung.com could raise? Would that create too many offerings and too many issuers coming to the market?
100% no. First off, to answer your question. So if you go back to 2016, so when the Jobs Act got signed in 2016, it was like $20 million or so that was raised. In 2017, it was like 42, and 2016 was a weird year because it started in the middle of the year. Okay. So, but since 2016, for the last 5 years, the crowdfunding industry has seen 100% growth year over year. So right now in 2021, we're over $500 million as a league, as an industry itself. Last year for 2020, it was the league, the industry, it raised $214 million total. The year before that, it was 104 million. That was 2019. The year before that, it was like 50 something. So I'm sorry, 41 million, I believe, in 2018. We've seen year over year increase of 100%. That's called building a hockey stick, because me and my buddy George Pullen, he's an economist, we're betting that we got the blade of the hockey stick. Now we're getting to the shaft. Next year, we predict 100% growth for Reg CF specifically. Okay. CF, because Reg A Plus, they're going to do $2 billion this year by themselves. They're going to be phenomenal, right? A lot of real estate deals get funded through Reg A Plus. But specific to Reg CF, we're already at 500 million for 2021. We've got 45 days left in the year. Crowdfunding season is October to December. So if you look at all of the data, courtesy of King's Crowd, our capital fund advisors, they will tell you the most money gets raised October to December. We don't really know why. We think it's for tax purposes. People are making investments. Okay. Sometimes we think it might also be for Christmas or holidays, where they're investing because they're going to gift you X number of stock in this company that you like. And so next year, we're going to do $1 billion. We're on track to do $1 billion just in Reg CF. The year after that, we're going to have that 100% increase year over year, so that by 2025, 26, we should be somewhere in the 8 to 12 billion a year raised via Reg CF. And people like, Samson, there's no fucking way that's going to happen. I'm like, no. Hockey stick, the first 5 years, that's the blade. The next 5 years, that's the shaft. So you can see that exponential. So in 2025, 2026, it will be somewhere between 8 to 12 billion dollars annually raised through Reg CF, and it'll sort of plateau and balance off. But that's actually a very healthy ecosystem, meaning it's not overnight. It did take half a decade, or it took a decade to go from 0 to 8 billion. And so one, that's great for small businesses. Last quarter of 2020, Q3 of 2021, over 17,000 jobs got created here in America through the businesses that were funded. And that's the difference when you're, this is my Capitol Hill speech sort of, when you're raising money for small businesses that are local, they're for local small businesses. That's just it. Yeah. Right. And so that money is not going to Wall Street and then to local folks. It's going somewhere to Miami. It's going to, Houston, Texas. It's going to wherever your project happens to be. That's local investment. And so the SEC, they're not going to be against creating jobs, because even when you're talking about a private portal from, whoever offers it to you, David Ducini from Silicon Prairie, you just have a landing page you have a page on your website that says ramses.com. The entire backend, that's just a regular portal.
It's fully fully compliant and onboarded.
Fully compliant. The only difference is at the very bottom of your web page, it might say
powered
by Silicon Prairie. It's because it's similar to your customers. They don't care what internet service provider you use, right? So if you use AOL, Comcast, or Verizon, they don't care. And so when you go to raise money, right, the legacy platforms, they've invested in a brand. They're like, yo, we're a Start Engine, we're Republic, we're WeFunder. They're telling you they're the brand. However, when you're already an established business, when you're already an influencer, you don't want your brand diluted by someone else's brand by sending your fans and customers to their website. You want all that organic traffic for your own. And so this is where the private labels, they will be ubiquitous, and businesses will be raising funds via Reg CF up to $5 million from their existing communities, from their existing customers. And at the very, very bottom in Arial font 10, it will say powered by insert name of crowdfunding as a service provider.
Yeah,
that's still 100% compliant to the SEC. And the SEC does want to see small business investment grow. And when you think about it in the terms of particularly the overall American and VC economy, $8 billion, $8 to $12 billion a year, it's not a lot of money. However, it is a lot of money when it's going to Main Street businesses.
Yeah, to a local pub in Houston or a small boutique hotel in Miami, right?
Yep.
Yeah. So then, I'm sorry for interrupting you. You mentioned something very interesting about the number of jobs created, which it's at the end of the day, that's the objective of the law, right? To create jobs. And I think it's good to not forget that there's jobs that are being created thanks to the effort of the Crowdfunding Professional Association, the platforms, the lawyers, and everyone, and that the jobs are really being created. I think that's a very good statistic to not forget to mention, because you can get lost in the 8 to 12 billion, which is nice. And I think you're right. How many jobs will be created? I think at the end of the lower part, it's going to be the most important thing. 8 to 10 billions could sound like a very big or small number, depending if you're saying Tesla is worth 10 billion now, Tesla is like $1 trillion, it depends what you compare to. But eventually this helps to create, let's say, 100,000 jobs. Then it's something very powerful, because it will continue to grow and develop into new verticals, and the Samsungs of the world, maybe new project to launch a dog to space, and you can fund it to your platform, right?
Yeah. So I'm still very bullish on crowdfunding in Latin America, because Ramses, you're going to be thinking, how do I get a private label platform that caters to Hispanohablantes, that caters to Latin America, and so no one's cracked that. It's coming, and we're always kicking, me and my brother Matthias, we're always kicking that around. We're like, hey, should we do this? And part of the reason, and so most people think that I'm crazy when I say, no, we're going to have an $8 to $12 billion a year ecosystem. The real reason this is going to happen is because every time there is a successful crowdfunding campaign, it lowers the investor acquisition cost and it lowers the issuer acquisition cost. Because for the last 5 years, when we've said crowdfunding, people think Kickstarter, Indiegogo. Now, finally, we're having $500 million raised, 1,200 issuers. And when you have 1,200 startups that are raising money as of this last quarter, that's 1,200 more people. Each of them, they have about 150 investors each in the deals. So you literally have 100,000 people who know what crowdfunding is. And so every year, that audience of what is crowdfunding, what is investment crowdfunding, it grows. Everyone now knows what venture capital is, but the term unicorn, it was invented circa 1993 for VCs to sell .com businesses. because they needed to tell people, oh, there's this business out there that's worth $1 billion. Since 1993, $1 billion actually was like a lot of money. Now it's like $1 billion. What are we gonna do with that? And so they invented this term unicorn. Otherwise, what the hell does a horse with wings and a horn have to do with a startup? Right? Like, you're telling me a horse that's got wings and a horn and glitters has something to do with making money? And so the VC community created this term unicorn. And so that was in 1993. Fast forward, everyone understands when you say, hey, they're going to be a unicorn, it's not that they're going to grow a horn and get wings and have glitter coming out of their ass. They're going to be worth $1 billion. That's just that's nomenclature that is known in the industry. So why we expect to see that 100% growth year over year is because when people say, hey, I'm crowdfunding, people won't assume it's donation or rewards. They'll assume it's equity or debt or some kind of investment.
Yeah.
And as we lower the customer acquisition costs and the investor acquisition costs, and more people know that, hey, they can invest in these early stage businesses, that's where the hockey stick comes in. Because right now, you just said it, someone's spending $60,000 on a marketing campaign. Probably 80% of that is just explaining what quote unquote crowdfunding is to the people.
Yeah, so and I think you're right about Latin America. I'm very bullish about it. And as you said, not necessarily have the recipe. I know that there is something, and you and Matthias also discussed, but there's 500 million people in Latin America, and so many thriving businesses. We're starting to see unicorns, using again that term in Latin America, from 3 in the last 5 years to like 34 just in the past 18 months. And that will make, entrepreneurs be willing to take the leap of faith saying it's worth it to, start a business and try to get funds from friends and family and risking everything. And that gap, and we've all discussed this in the past, but the gap where you run out of the friends and family funds and start making money organically and and you're then VC backable, that gap needs to be filled. And I think crowdfunding is that filler. How we'll be developing in Latin America, I'm not sure. I think more education needs to happen, but in Spanish, obviously, and more accessible to raise funds. Right now, if an American company wants to raise funds using RegCF, they need to incorporate the United States, which is already an upfront cost, and add it to what they had. They need to make sure that they are not violating the RegCF rule by depending on how they structure the business. So they do need a lawyer to guide them through, and not to just incorporate an LLC and that's it. But it needs to have certain link between one and the other, so you're not running into co-issuers things. It's not right now a plain vanilla solution. And unfortunately, I'm not sure if eventually it will be like a one size fits all. There are Mexican portals that are doing good for crowdfunding, but good for Mexico, right? Maybe like 5 years ago, what was going on in the United States. The problem is you cannot onboard clients from outside Mexico. So it still doesn't answer, things for Peru, Colombia, Brazil. I'm sure we'll have more discussions about it.
So recently, when I say recently, I mean the first week of November of 2021, the European Union, they streamlined some crowdfunding regulations between the countries of the EU. Because before, like the Nordic states, Finland, Norway, etc., they had where you do cross-border crowdfunding. But that wasn't the case where if you had a campaign in Finland, could you then get investors from France? But last week they streamlined it so that you can do that. And so there's already the existing framework for how you have cross-border investments. And maybe we just need to stand up an arm of the Crowdfunding Professional Association there in Mexico, if only to engage the regulators to say, hey, this model exists so that you can have an entire region who make investments, regardless if you're based in Mexico, Chile, or Peru, or Argentina, because that model just came online in Europe this past week. So we'll have to think about that.
Yeah, I'll take a look at this. I just saw that they increased, but I think it was only UK, the crowdfunding limit to 13 million pounds, I think, which I thought it was big.
Well, you got to keep in mind the UK is no longer part of the EU. They they
Yeah.
they Brexited themselves into their own set of
Yes.
regulations. But you know, there's definitely some opportunities because maybe we're gonna have to. I'm not joking when I say we're gonna have to stand up a chapter of the Crowdfunding Professional Association there in Mexico. One for Spanish language crowdfunding
Yeah.
information, and two, just so once a quarter, Ramses can send an email to the regulators there in Mexico to say, hey, here's an update. We should do something similar.
Yeah.
Because I'm not saying let's invent the crowdfunding wheel for Mexico because it already exists. Let's just put some, let's just put some air in the tires to get things rolling a little bit better.
Yeah, I think it's a great idea, and I am. I wouldn't say true believer because it's not a religion or faith, but I do feel that and unlike a lot of crowdfunding, you know that I invest a great deal of time talking to startups and helping them to go and raise funds through platforms. I think Mexico is positioned perfectly to really grow in the next few years, uh, and definitely the regulators need more guidance. I'm not sure if you've heard of this, but when the fintech law started, in Mexico, what happened is innovation started so quick that at some point they were saying we might be breaking some rules and we don't know. So they just organize themselves and they knock on the door of the regulator. Hey guys, we're doing this. Regulate us. And they were like, who are you guys? Okay, maybe 20, 50 companies. And they say, okay, we will give you like a safety blanket for all of you guys, but there wouldn't be no newcomers. So you can do business. In the meantime, that we give you a license. For that, they would need to obviously review all of the information, a bunch of stuff, government kind of stuff that takes forever. But in the meantime, they were allowed to do business. If a newcomer, arrives to Mexico, for example, voila, I'm not sure if you heard of this fintech, I think from Argentina, that's now raised like hundreds of millions of dollars. They're in Mexico, and they couldn't get a fintech license, so they were about to shut down. Mm-hmm. They were smart and they had deep pockets, and what they had to do is just they bought a bank. They bought a bank, and now they are even more strictly regulated because being a bank includes high regulation that a fintech that is just electronic payment. So I think it's a good idea, and that we can elaborate more on that, and maybe on my next trip to Playa I can discuss that with Matthias, that if he comes to Mexico City, it would be awesome.
Mm-hmm. Yeah, I went to Playa in June. I saw you in June, and so I haven't been to visit you in Mexico City, so it's a good idea. We're gonna figure this out, but for the moment, Ramses, I do have to hop off and do some work this morning, even though this is work, because we're gonna stand up a crowdfunding professional association Mexico chapter, and I'm telling you right now, you're gonna be president, and your role and responsibility is once a quarter, you're gonna send someone in the Mexican government, you're gonna forward them an email that says, "Hey, this is what our northern neighbors are doing. We should do something similar. See below." That way, it's not too much work on your part. But again, to start that conversation, because I think so many people in Latin America, their destination is Mexico, because they think they want to come to Estados Unidos, when what they really want to do is stay in Mexico. But we'll have that conversation later. So thanks for joining me.
No, what are you saying? I always like our chats, and it gives me a lot to think. I appreciate you also making the time. Let's do this more frequently. Let's try to once a month, and 100%. And let's start that Mexico chapter of Crowdfunding Professional Association.
Excellent. So I'm going to send you this recording so you can share it with the world, because there's lots of little information, because you'll want to listen to it again, be like, oh, this is brilliant. So thank you for joining. This call is now being recorded with your host, Samson Williams, and Ramses, who's the new president of the Crowdfunding Professional Association Mexico chapter. He just found out this moment, as did I. So we'll
Only
work out
one
the paperwork.
person there.
Hey, you need the first person to start a revolution. Let me tell you.
I do agree with that. This
All
is
right,
great,
man.
man. Enjoy your day.
See you later. Bye.
Bye bye.